So as you heard, President Trump saying he's not thrilled that they're hiking interest rates in the US. Certainly a rare intervention for any US president. What do you think he's trying to say here?
Oh, I think his instincts are dead on at this point. I mean, he, as usual, is pretty much cutting to the chase. His whole economic expansion really depends on cheap debt and very, very strong stimulus. And right now, higher rates are clearly having a deflationary and a destimulatory effect on the U.S. economy. He's very keenly aware of all the dynamics of our trading partners who are, in fact, effectively devaluing their currency. I mean, earlier this morning, the dollar index was actually at a year high. It was just racing higher as the Chinese continued to devalue the yuan. And the fact that Trump came on today and essentially reversed the whole sentiment was fascinating because it literally just completely capped the dollar rally at this point, and all the pairs bounced off their support and all their resistance levels now. And in some ways, right now, when you're looking at the currency market, dollar yen to me is sort of the barometer of the dollar strength. Dollar yen really has been having a hard time struggling above this 113 level. And after his comments, it feels like basically it turned from buy to dip story to now much more sell the rally story. Only if we see dollar yen clear this 1350 level do I think the dollar rally continues and the market completely shrugs off his comments. But I don't think the market will shrug off his comments. I think he's dead set about not having a strong dollar because he understands that that is probably the single most dangerous thing that could tip the U.S. into a recession sooner rather than later.
So it sounds like you're saying there is a little bit of method in his madness here. Yes, on the one hand, his administration, of course, has its foot on the accelerator of the US economy at the peak of the cycle. Surely, though, the Fed is correct in hiking interest rates because there has to be some kind of counterbalance against that fiscal stimulus, no?
I actually disagree with that. I think the Fed is always, as usual, playing sort of the last war. As a matter of fact, the one person on the Fed who is really wary of further tightening is the only one that's non-voting and nobody's listening to him is Neil Kashkari, who's basically said that as the yield curve is getting flatter and flatter, the Fed should be paying much more attention to that. When you look at the broad general economic strength of the U.S. economy, it's deceptively good. What I mean by that is it's not nearly as good as you would think it is. The recovery at this point is very narrow-based. Real wages are actually negative on a year-to-year basis. What we have basically created is high inflation with modest growth, almost all of it going to 1% of the population, and that is just not a sustainable model. And in that, you have the Fed raising rates and tapering its balance sheet. So some experts have actually estimated that the real tightening here is 300 basis points, because if you combine the balance sheet inventory with the tightening that we're seeing right now, it could be way too tight. My point is that we could be on the cusp of what's called a policy error, where the Fed tightens too much. As usual, we'll only know this maybe in 6 to 12 months. But the point is that they should be much more anticipatory than they are. There is, I think, far less reason now to be as tight as there was before. And in this case, actually, Trump's instincts are actually dead on. He's right to worry about this because this could completely sabotage his political chances in November if the U.S. economy begins to slow down markedly.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.